Financial News Breakdown: Understanding economic trends to protect your wealth. Let's cut through the noise. The economy is going haywire, and if you're smart, you're asking, what does this mean for my money? Because here's the harsh truth. If you're just hoping things go back to normal, you're setting yourself up to get burned. Today, we're diving into the biggest economic trends rocking the world right now. And more importantly, how you can use them to protect your wealth instead of watching it bleed out with everyone else's. So if you're done letting the headlines scare you, let's get into it. Stop pretending the economy doesn't matter. Ignoring the economy won't make you rich. Let's get one thing straight. Pretending the economy doesn't affect you isn't an option. If you have money in a bank, a job, or investments, this affects you. When inflation rises, interest rates spike, or the market tanks, your wallet feels it, whether you like it or not. The economy is like gravity. It's there whether you pay attention to it or not. And ignoring it just means you're going to trip over it harder. Adapt or get left behind. Here's the takeaway. To protect your wealth, you need to understand the trends. Not every detail, just enough to make moves that keep your money safe and working for you instead of against you. The trends you need to know right now. What's really going on? Let's get into the big players messing with your money right now. These are the trends you can't afford to ignore if you actually want to build wealth, not just get by. Trend 1. Rising interest rates, the cost of debt just got real. Thinking of buying on credit? Think again. Interest rates are spiking, which means money is not cheap anymore. Mortgages, car loans, credit cards, they're all getting more expensive by the day. For those of you out there drowning in debt, newsflash, it's time to start paying that down fast. Rising rates mean that every dollar you owe is going to cost you even more over time. This is debt's way of sticking it to you over and over. High interest, negative, high cost. Here's what to do. If you're holding on to high interest debt, it's a ticking time bomb. Start killing it now. Paying it off may not be sexy, but it's a hell of a lot better than losing your paycheck to interest. Don't feed the beast that's draining your future wealth. Trend 2. Inflation, your cash is losing value every day. Money shrinking before your eyes. Next, we've got inflation eating away at your money like a slow bleed. Every dollar in your wallet buys less than it did yesterday. If you're keeping all your savings in a regular bank account, congrats, you're practically lighting your money on fire. Inflation doesn't care how hard you work to save. It'll keep draining you as long as you're holding cash that isn't growing. Inflation equals death by 1,000 price hikes. What you need to do is start moving that cash into assets that grow. Sitting on cash alone, you're losing money every day. Look at real assets, index funds, real estate, stocks that outpace inflation. It's not about saving, it's about keeping what you've earned. Inflation is a silent killer. Don't sit back and let it drain your future. Trend 3. Market volatility. The ride isn't over. Enjoy the roller coaster. And then there's volatility. One day the market's up, next day it's down. Most people freak out and start making desperate moves, selling low, buying high. But here's the deal. Volatility is normal. The market has always been a roller coaster, and the wealthy know this. The people who win, they stay calm and they don't sell every time the market gets shaky. Volatility gathers risk, but also opportunity. Here's the game plan. Don't let volatility scare you into bad decisions. Stick to your long-term investments and use the dips to buy when others are panicking. Wealth isn't built by flinching every time the market sneezes. It's built by riding the wave when everyone else jumps ship. Moves to protect and build wealth. When things get crazy, how to play defense and offense. Alright, now that we know what's going on, let's talk about what you can actually do to stay on top and even get ahead when the economy is going off the rails. Step 1. Rebalance your portfolio, diversify or get crushed. If you're serious about wealth, stop betting everything on one horse. Diversify. Spread your money across assets that aren't all tied to the same outcomes. Stocks, bonds, real estate, maybe even some cash on hand. Think of diversification as your financial insurance policy. Don't put yourself in a position where one bad market swing wipes you out. Diversify kills the financial safety net. The idea here is simple. Don't risk it all on one bet. The boring stuff is what keeps you in the game when everyone else is panicking. Diversify now or risk losing big later. Step 2. Hold cash, but don't let it sit around doing nothing. Cash is only useful if it's working. Cash is great for flexibility, but not for growth. You need some cash for emergencies and to jump on opportunities, but don't just sit on it. Inflation will eat it alive. Look at high-yield savings accounts or short-term investments. Cash isn't supposed to rot. It's supposed to keep you agile when the market dips and opportunities show up. Cash, flexibility, not wealth. Cash lets you stay flexible, but remember, it's not there to make you rich. It's there to make sure you don't have to sell your assets at a loss. Use it smartly and don't get lazy. Step 3. Get into income-producing assets and stop betting on speculation. If you're hoping for big market swings to make you rich, good luck. Real wealth is built by owning assets that pay you to hold them. I'm talking dividend stocks, real estate, the things that generated income even when the market's in chaos. You don't need assets that look good on paper, you need ones that actually pay you back. Income-producing assets, security. Forget the hot stocks and get serious about building income streams that keep your cash flow strong no matter what the market's doing. This is wealth you can rely on, not just hype. Don't panic. Stay focused on the goal. Stay calm, stay rich. Here's where most people mess up. They panic. The second the market drops or the news gets scary, they start making decisions out of fear. That's exactly how you lose money. If you've got a strategy, stick to it. The economy is always going to be chaotic, but wealth isn't built by reacting to every headline. It's built by holding steady. Step 1. Ignore the noise and stick to your plan. Financial news is a hype machine. Don't let it push you around. If you have a solid plan, trust it. The people who lose big are the ones who jump ship every time the market shakes. If you've done your homework, sit tight and let everyone else panic. You're here to play the long game. Step 2. Learn the basics and stop relying on other people's advice. Here's a secret. The more you know about how the economy works, the harder it is for anyone to scare you into dumb moves. Learn the basics, interest rates, inflation, market cycles, so you can make moves based on your knowledge, not someone else's hype. This is your money. Take the time to understand it. Step 3. Don't just survive. Use the chaos to get ahead. If your only goal is to survive the next market dip, you're thinking way too small. Use these economic shifts to your advantage. Position yourself smartly, look for opportunities, and keep building. Wealth isn't about just getting by, it's about getting ahead, even when things look messy. If you're done letting the economy push you around, hit that subscribe button and drop a comment if you've made any changes to protect your wealth or if you're just starting out. Let's stop reacting, start building, and keep stacking wealth, no matter what the headlines say. See you in the next one.